Nasdaq Market Site. This is Fast Money America's post-market show. Got to get to Apple. About 4:02, Joe, blowout by all accounts. And again, I don't know, the guidance was lackluster. Basically what they're saying in terms of guidance is that sequentially they will have a quarter next quarter where revenues will go down and EPS will also go down. And when has that happened with shares of Apple?
Well, when haven't they said that? They always downplay the guidance. They always try to temper expectations, but it doesn't work because the analysts, as we saw, and this was probably one of the, I'd say it's probably the most significant quarter I can remember in terms of the analysts really getting ahead of it, and they kept ramping up their price target and their earnings. But guess what? They delivered. I do have some concerns with the succession question. We did see that John Ford broke the Wall Street Journal story, if you can break somebody else's story, and talk about that some members of the board were out talking to a headhunting firm. Apple, Jobs came out and said that's hogwash. But nonetheless, it's a great story. I actually bought some calls today because I didn't want to miss it in case they beat. And they've got an upgrade cycle. That's going to drive earnings even further. I would say that maybe you get your full position on a pullback, but I think you have to be there because if you look at the valuation of the stock, forgetting about what it said, and I agree with Karen completely, I'm looking at a stock that was not appropriately trading at 310, close to 300. I'm looking at something that was at 350, 360. But the valuation, I'm paying slightly more than a market multiple for growth that far exceeds the market. So to me, it's still a reasonably priced stock worth owning. Here's to figure out the PE on $1 million stock price. But there is one company that you do have to look at, and that's Qualcomm. Qualcomm is a great derivative play here. Don't forget Apple's a relatively new customer of theirs, and they are on the iPad, they are on the iPhone, and they are on the Android. It's grown like a weed. They report tomorrow after the close. So it's a mature tech stock. It just doesn't interest me whatsoever. There's no growth there. It's flat earnings year over year. Revenues are flat. There's just nothing going on there. People think there's value. I don't know where the value is because it was just stolen from them. Can I say that?
Yeah.
By China in, Alipay. That would be the best news. We hear a settlement there, and we haven't heard it. Well, one thing, look at EMC. EMC, don't forget, they participate in the VMware growth through their ownership. They're going to report tomorrow. To me, that's one of the best cloud plays out there. Storage, it's done a fantastic job. I think the stock's cheap, and I would buy that one here as well. And it's up almost 3% in the aftermarket.
That's part of the reason why.
I agree with that short, long end of the Treasury. But let's go to the equity market. So if you take a look at the equity market, for all the consternation and the worry, the market had held up pretty well. So do you think the market was assuming that a deal was going to happen? And if so, then is this a much better deal? And if the deal does pass as we think it is right now, is it off to the races for the equity market?
I wouldn't say off to the races. I certainly think it's a positive for equities. And I can say unequivocally, BTIG has a lot of very large clients. And I don't know anybody who, until recently, I don't know anybody who really thought that there was anybody in Washington who was that dumb to not actually raise the debt ceiling. The composition was a debate. But
so one more question. So go to Karen, the point that Karen made a few weeks ago, which is asset allocators going from bonds then to equities. Don't you think that's going to pick up steam now?
I think so, but then you start getting into sort of valuation arguments and the general investing landscape post a financial crisis, i.e. Italy is going to become...
One, we've been mentioning that as part of the Apple ecosystem. That is trading higher in the pre-market session. Stephen Weiss, you say this is a beneficiary not only of Apple, but also of Android.
Yes, they're on both platforms. So it's for them, it's win-win with 550,000 Android activations per day. I mean, they're there. And the best thing is they just license technology. So they don't have the cost of building the chipsets. And if you want CDMA and if you want new applications, you got to go to Qualcomm.
Let's also check a drop of 14%, Stephen Weiss.
They just missed it. They blamed a bunch of things. They blamed input costs. They blamed consumer sentiment. They should have talked to Harley about consumer sentiment and Apple as well. They weren't seeing those issues.
Got to pop here for time for the final trade. Dan Nathan.
Wait to buy Apple.
Stephen Weiss.
Peabody, all-time high coal prices, buy it.
Watch and see you tomorrow, bright and early, 9 a.m., Squawk on the Street. And back here tomorrow at 5 p.m. for more Fast Money here on CNBC. Meantime, Mad Money with Jim Cramer starts right now.